This month was a bit of a letdown in some ways, but also an improvement in others. Overall, we had 9 different payments, which actually netted us more in income by 14.04% when compared to February of 2023. We were paid out $3 New Zealand dollars and 47 cents by AGNC. I decided to increase my position here this month by a further $134 US dollars and 33 cents due to the stock itself being close to 60% undervalued at its current price. It's somewhat of a risk, but it's something I feel has been an educated gamble, with murmurs in the market of other companies increasing their housing stock, such as Tricon Residential, which bodes well for companies such as AGNC due to MREITs in certain parts of the market then being able to sell more of their product in the form of mortgages to companies and the general public. UST also paid us $2 New Zealand dollars and 38 cents this month. Not much to state here regarding the fund's performance, as it's been ticking on an expected and welcomed steady rate. We next had a payment from EFC, who paid out $6 New Zealand dollars and 14 cents. This company is somewhat similar to AGNC in the sense that it invests in mortgage-related securities. 2024 should be a better year for MREITs, as with interest rates hopefully dropping, the mortgage sales may increase, which means more products sold for EFC and therefore more income. ETY then paid out $2 New Zealand dollars and 95 cents. The funds it holds in its portfolio, such as Microsoft, Apple and Amazon, have all done extremely well, with stock price increases ranging from 13 to 90% for the past year, which is way better than the average market. ETY itself has also done great by gaining 14.73% over the past year. Profits have continued to remain high, and I will continue to invest into ETY. Next on the list, we had Horizon. This BDC paid us $10 New Zealand dollars and 73 cents. And has continued to pay out the monthly distribution of 11 US cents per share. Though my position is down 10.54% at the time of writing, I still believe this company has more price growth in the future and will be able to continue to pay their dividend due to the nature of their business, which is financing companies who operate in the tech, life science, IT, and healthcare industries. These are industries that are ever growing and will always need backing as the world continues to move into a more technologically supported world. It is hard to somewhat hold on to the idea though, with net profit margins down as well as earnings per share, which are the main indicators of a stock's ability to perform positively. If they can't return to higher profits, then it may be prudent to cease strip investing into the stock for the time being. Jiffy then paid a modest payment of 30 US cents per share, resulting in $1 New Zealand dollar and 20 cents. Again, I'm just planning on letting this one tick over, regardless of price, as it's something I'm in for the long run. So as long as the profit margin for the stock indicates it'll continue to be able to pay its dividend, then I'm here. It's a boring safe stock that should have minimal fluctuations in price, but be up over the long run, due to the nature of its investing, which is trying to match the S&P 500 and other market tracking stocks. Prospect Capital has reduced its payments, which resulted us in netting 18 New Zealand dollars and 84 cents. This has continued to be a stock of concern in the past couple of months due to its dropping dividend per share. It's always a slight test of the middle, as on one hand the current stock performance isn't confidence inspiring, however due to Prospect Capital's massive portfolio and diversified holdings, it seems as if it can overcome this current small downturn and then rise on the other side for the better, especially if you decide to buy at the current discounted price. QLD came through with its typical monthly payment of $2 New Zealand dollars and 62 cents. As I said, this one is a bit of a loss due to the math that goes with it. Essentially, for you to not lose on the stock, you need to buy enough of it at the right price that will pay a great enough dividend for it to offset any losses that occur through stock price movements. A great video to understand this more is one by Dividendology, which I'll link below, that essentially shows you with both a lump sum or monthly investments into QLD, you'll eventually lose out because of its negative dividend growth rate and negative price growth rate. Another great video explaining the characteristics of QLD is the video by the Average Joe Investor, which I'll also link below. Our final payment came from STAG, who paid us $3 New Zealand dollars and 82 cents, which is a slight increase from last month due to its dividend per share increasing by 0.68%. This stock has been solid with its performance through 2023 and has continued the positive trend by starting the year off strong with a dividend increase. The stock price, however, has dropped by negative 4.43%. However, contrary to that, its profit margin has continued to grow and forecast estimates that it will not slow down, which is great to see as its profit margin is the greatest indicator for positive performance of a stock. As I said, although we only managed to accumulate 52 New Zealand dollars and 39 cents this month, it's still an improvement from the 45 New Zealand dollars and 94 cents we earned last year in February. We're definitely looking forward to March and April, where we should earn close to 300 New Zealand dollars in dividends per month if the upwards trend continues in those months. The global market at the moment looks more likely at a soft landing, according to Russell Investments. Although it isn't all perfect, as markets such as Europe and the UK will continue to have high inflation, and China will continue to grapple with debt and property market issues. Using this information, we can make educated guesses as to the future of what stocks are going to perform well this year and double down on those assessments. As always, thanks for watching, and I'll see you on the next one. Cheers.